With more than 6,000 small and microcap companies listed, if you're looking for the next Apple at the earliest stage, then channelchek truly is the orchard. The listed companies support channelchek, so it's free for you, the potential investor, to gain access to institutional quality research from FINRA licensed analysts, advanced market data, industry reports, news, and a growing catalog of videos and webcasts. Make sure to subscribe to our YouTube channel and register for channelchek so you're always up to date on what's going on at the small and microcap data place. Welcome to the C-Suite series presented by channelchek and Noble Capital Markets. Noble is an SEC-registered, FINRA-licensed broker-dealer and the source of the equity research available on channelchek. Today's interview features Digerati Technologies, OTC ticker symbol DTGI. Noble Senior Research Analyst Michael Kupinski interviews Digerati CEO Art Smith. Visit channelchek.com or click the link in the description for Noble's research on Digerati, as well as news and advanced market data. And now, here's Michael and Art.
We have with us Art Smith, who's the CEO, and Art. My first question here is: you and Craig Clement, the executive chairman, have a history of building shareholder value, and so as an introduction to the people that are listening in, can you talk a little bit about some of the companies that you have been involved with in the past, and maybe some of the value that you created in the past?
Absolutely. Thank you, Michael, and good afternoon. So, giving away our age a little bit here, going back some years, but the predecessor to Digerati Technologies was ATSI Communications, and it was a telecom business model, but it was different to what we're doing today. It was more international in scope, targeting the markets throughout Latin America that were deregulating and demonopolizing back in the late 90s and early 2000s. So we embarked on what we believe was a pretty unique strategy that was borderless in nature, and built that company up from scratch, Michael. We started with basically just a business plan, built it up to, at its peak, it was about $650 million in market value on the American Stock Exchange. We took it public, listed on the OTC, back in the day was the OTCQB, and eventually got it onto the American Stock Exchange. And the highlight of that company, or that business model, was, of course, ringing the opening bell at the Amex. So we did well with that strategy. We had to make some changes along the way because of what happened with the telecom industry back in 2001, 2002. We're all too familiar with it, especially us industry veterans. They were not fun times back then, right? But we survived. We came through that as a VoIP carrier, built the company back up, which led to what we're doing today in the cloud communications environment. We also spun off a company during that time as we were building ATSI. We spun off a company by the name of GlobalScape. The symbol, it's not trading anymore on the NYSE. It was trading on the NYSE for a good 10, 11 years, but it got sold. The company was sold here about 8 months ago. So they took it back private, but it sold for 250 million. Same as ATSI. GlobalScape started with just a business plan, an idea, and some relationships with some software developers, and built that company up from scratch. Took it public as we were building up ATSI, and I think GlobalScape's peak value was just under 300 million on the NYSE. So that's a nice little success story. Craig Clement was involved early on with a company by the name of XPEL, which is now on the NASDAQ. I think their market cap today is over 2 billion. Craig took that company public back in, I believe it was around 2005, 2006. Great company, great success story here in San Antonio. So again, we're not here to toot our own horn. I think the important thing to note is we've got an experienced management team. We've done this before. We believe we've got all the stars are aligning for us here with this business model. So we're excited about creating that kind of value in the future for our shareholders.
Well, you're a 30-year veteran of the telecommunications industry, and know it well. Can you talk a little bit about Digerati Technologies and the company you founded? What drew you to the opportunity in this space?
Well, as I mentioned, Michael, we came from the legacy. We're telecom veterans that have moved into the cloud, right? So We came from that legacy world to VoIP, which is a term I'm sure you're very familiar with, voice over internet, which, if you go back to the mid 2000s, 2004, 2005, when Vonage went public, right? And everybody was wondering, what the heck is VoIP, right? We were actually providing VoIP services back then on an international basis. Again, it was a different business model of what we're doing today, but at the core, it was VoIP or cloud-based technologies, right? And so that just, again, over the course of about 10 or 11 years, we really learned that technology well. We learned how to deploy it. We learned how to support it, and more importantly, we learned how to sell it, right? So it led to what we're doing today as Digerati, which essentially we went from just being a traditional, I say traditional, VoIP is traditional to us now, or legacy to us, but we went from being a traditional VoIP carrier to a full service cloud communication provider serving the small and medium sized business. And we did it for several reasons. One is when we looked at the landscape back in 2015, going into 2016, we realized that there was a big market void out there, right? The small and medium-sized business was underserved drastically. The bigger guys like Vonage that had gone public 10 years before, they had started moving up market, and some of our larger competitors, national players, the incumbents, the AT&Ts and Verizons of the world, were moving up market. And a lot of these small, medium-sized businesses just had some significant pain points, Michael. And so I was actually out in the street, talking to businesses, talking to potential channel partners, and I realized that there was an opportunity to really, take care of that segment of the market that was growing rapidly. At that time, when we kicked off the business model, about 75%, or actually closer to 80% of the small and medium-sized business market had not moved to a cloud or VoIP communication system, which they absolutely needed to do, right? And so there was a lot of opportunity there. The other thing we realized, recognized early on in the landscape was that the market was very fragmented, right? There were so many of these smaller regional service operators like us, right, that were doing a great job, quite frankly, a better job than the incumbents, a better job than the national players, some of which I've mentioned, at taking care of their small and medium-sized business customer in that local or regional market. So we realized, look, we've got a real opportunity here to maybe do some consolidation along with executing on our organic plan, which is what we've done. And as you know, we've completed 4 acquisitions in the last 2.5, 3 years, and working on others.
And I like to think of Digerati and its cloud-based telecommunications network as like the backbone of a business, right? The telecommunications network does the heavy lifting to support all the areas of the company. It's amazing to me that there are still businesses that use legacy telephone services and have yet to evolve. And I think there are reports that only 31% of small businesses have migrated to a cloud-based telecommunication solution. How frequently does the company run into businesses that are still tied to a traditional phone service? It would seem to me that this might be an easier sell for you, for a company that's trying, than maybe rather than a business that's trying to displace its current IP-based network. Am I right, or what are your thoughts?
You are correct about that. So we have kind of 2 categories of prospects that come our way, right? We have the former, which you mentioned, is a company, a small and medium-sized business that is still in a legacy environment. And you're right, Michael. There's so many businesses out there that are still operating with analog lines, analog circuits, traditional T1s, and with their voice network on it, and a traditional PBX in the closet somewhere. And so again, that represents opportunity for us, right? So we bid on those kind of opportunities, week over week, month over month. And there's, as you mentioned, there's a lot of opportunity there as businesses continue to migrate to the cloud. And as you mentioned, these businesses eventually will live in the cloud, right? So one of our other product lines is broadband. We provide broadband services in Southwest Florida and in South Florida through a network we have in Miami. And so, we think that's important. It's an important add-on or part of a bundle to our Ucas or cloud communication solution, because at the end of the day, the delivery of that digital oxygen becomes really important for our service, as well as any other cloud-based services that business is going to migrate to. So if they're looking at migrating to the cloud for their cloud communications or their telephony, so their telephony applications, they're likely looking at other applications to move to the cloud with as well, right? It could be Office 365, right? Something like that. There's so many other applications, as you well know, that are in the cloud for small and medium-sized businesses. It could be their accounting system, right? Quicken, right, as an example. So delivery of that digital oxygen over a reliable network is part of what we do as well. And again, we're here to provide that type of solution. As you mentioned, we do have opportunities come our way where business has just kind of been fed up with the support or lack thereof. Lack of support from one of the national players. Again, they tend to move up market. They haven't done the best job at taking care of that small to medium-sized business. The local touch is missing, Michael, in a lot of those cases. And I can't blame them. They're larger companies. They're behemoths and billion-dollar corporations in some cases, and they're going to continue to move up market. So we believe that's an opportunity for us, right, to serve that small to medium-sized business with great solutions and exceptional support.
And Art, I know aside from just migrating to the cloud or just having the local touch, you've talked about the evolution of business telecommunications in the U.S. In the past and other presentations. Can you talk about the evolution and the key drivers that are moving businesses to adapt to a cloud-based telecommunications service?
Well, in a lot of cases, it's regulatory. As you know, there was an FCC mandate not too long ago whereby basically the legacy network that a lot of us and a lot of businesses used for over 100 years was going by way of the dinosaur, and they were basically going to shut that down, right? So there's a mandate there from a regulatory standpoint, which obviously helps us, right, as businesses realize they're going to have to do that. But then it's just cost savings, right? It's efficiencies. It's having a communication system that helps that business engage with their customers. And with a cloud-based system, and I've mentioned this in some of my presentations recently in interviews, integrating with other cloud-based applications becomes really important for that business, right? And we're looking to help our customers engage with their customers, right? We call it a cloud communication service, and everybody thinks, oh, it's telephony and broadband, but it goes beyond that. And back to the evolution. I see that there's like three waves, right? And we're just entering the third wave. The first wave was when companies started moving from the legacy environment to VoIP, right? The term that's commonly used. And of course, that continues to happen today, even as we just spoke about. The second wave was as businesses started realizing that they needed to move to the cloud. It wasn't just a VoIP network anymore, getting a call from point A to point B via the VoIP network. Now it was about actual infrastructure within that business, right? Actually having a cloud-based communication system in that business that, again, replaced the legacy PBX in the closet, right? So that was the second wave of kind of migration or evolution. And then that's still occurring, right? Depending on the business that we're talking to or prospecting. And then the third, which again, I think we're just entering this third wave, is integration with third-party systems, right? I think you've seen we've announced we've got integration with NetSuite. We have integration with Microsoft Teams, right, which has done a great job. I mean, they've grown incredibly throughout the pandemic. So integration with third-party systems, which introduces kind of I call it a light development requirement on our part, is important to us, right? So we're starting to invest in development and integration. And again, it's light in nature. I don't want you to think of us as an R&D company. We're not, right? Our focus is sales, marketing. But we're going to invest in this light development in order to achieve that integration with those types of systems, which at the end of the day solve a customer problem, help them operate more efficiently, right, and help them run their business better, right, at the end of the day. And it usually does lead to cost savings for the business. I mean, I don't think there's been a case where there isn't some type of cost savings or efficiencies that come about when we introduce our solutions, even if as it applies to the third wave. So we're seeing opportunities in every one of those categories that I mentioned.
And it's interesting, in the last year, of course, we went through the COVID pandemic, and it's been extremely disruptive for small to medium-sized businesses, some which have closed, others that have adapted to the norm. Those that were able to adapt have moved forward with flexible workforce, many employees working from home. Can you talk a little bit about your telecommunications services, how this might you serve a particular need for businesses, and overall, what are the things that these small to medium-sized businesses are really looking for today?
Yeah, so the pandemic, you certainly don't want to capitalize on a crisis like that, but we took a lot of pride and our team was really passionate about being able to help our business customers stay in business during the pandemic. We had a lot of requests when at the end of the day that business needed to go remote, right, with their employees. And the beauty of it is if they're on our network, it's easy to do, right? They could take that same cloud-based application, take those devices, take their mobile device, and be at Starbucks, right? They could be at home. They could be anywhere, right? And so we had a lot of that happen over the last year and a half, where customers would call and say, "Hey, I'm moving 30% of my employees home. They're going to work from home. Can you help me with get that set up?" And it's actually very straightforward in a cloud-based platform like ours, right? And so that's been a big demand. We've also gotten demand for some of our as I mentioned, our digital or broadband services that we provide, right? The delivery of that digital oxygen. We've had applications that required additional broadband connections, right, to support another facility for redundancy or diversity purposes, right? We've had requirements for disaster recovery, right? Business continuity because of what's going on in our environment. So almost every application that we offer has been in demand throughout the pandemic. And again, we've always said that, this is where you need to go, Mr. Customer, right? You need to move to the cloud with your communication system. And the pandemic just kind of helped a lot of these businesses realize, hey, this does make sense, right? We need to do this not only because of the pandemic, but, there may be a need down the road to have that type of infrastructure, to begin with, right?
And it seems, Art, like one of the biggest opportunities for the industry in general, and you in particular, is the movement towards UCaaS networks. And you talked a little bit about unified communications as a service networks. These networks support telephony, but also audio, video, web conferencing, messaging, instant messaging, and business processes. I was wondering if you can talk a little bit about your plans and of course your offerings of the UCaaS, and certainly there are new applications and platforms that can ride on top of UCaaS. So I was wondering if you could talk a little bit about the applications and what you're seeing in terms of the trends for small and medium-sized businesses on the UCaaS network.
Well, as you know, if you're in a UCaaS environment, you can have an actual telephone on your desk, right? You can have an application running on your mobile device. You can have an application running on your desktop. So you can be pretty much anywhere, right, and have connectivity to your core communication system as a business, right, on our platform. We've always touted that. Our peers obviously promote that as well. Basically, that you can be anywhere and communicate from any device at any time, right? And so that obviously still is a big demand, and it's a big feature that we promote as we're selling our services. But I think some of the other things that have come into play include applications. Back to the integration, right? Is that not only do they want to be able to communicate from anywhere on any device, but how do I integrate with my CRM solution, right? As an example, when I'm anywhere else, right, or somewhere else. Well, obviously, if we're able to integrate with that CRM system or application, they're going to be able to, have that call and that window pop up on their CRM from anywhere they're located, right? And so it's integrated. So that's, again, back to the integration. That's such an important part of what we're doing, because at the end of the day, it supports every application that business might need from a remote working environment.
Well, you must be doing something right, because Digerati's key differentiator is a remarkable low churn rate, less than 1%. And I believe that you attribute this to your local touch points. And first of all, can you talk a little bit about local touches with businesses, how important that is? And is it as important in terms of relative to the affordability of these companies to kind of switch to another network or another provider? And so I was just wondering if you could just talk a little bit about the characteristics and advantages that Digerati has compared to peers.
Yeah, so look, we're very competitively priced. We're very aware of what our peers or our competitors are charging for services, and we want to remain competitive. We don't sell on price, right? In some cases, we may be actually a little bit more, per user than some of our larger peers, depending on the application. But again, we really focus on selling a solution, not just, hey, here's a seat, a telephone, a cloud telephony seat for you. It's usually tied to something else that helps bring value to that service or solution that we're providing. But I think, in terms of the market and the support that's again we believe is missing from the larger players, right? The incumbents, the national providers, that local touch. We've really placed an emphasis on that in two ways. Number one, as I mentioned, our M&A strategy is really focused on that, right? When we acquire a smaller regional operator, and by the way, we're looking at companies that are between 2 and 10 million in annual revenue for a lot of reasons. Number one, they're too small to attract a larger private equity group, right? They don't have that exit option. They're too small to attract a larger pubco, right? That's not an exit option. So their exit options are limited, and we feel that we're, a good avenue for them to create some liquidity for themselves as owners of the business and join our family, right? So what's important when we make this acquisition of a smaller operator? Well, number one is we take a look at their churn, and every time, Michael, that we conduct due diligence on these smaller providers, we find out that they usually have done a really good job of taking care of their customers at a local level, right? And their churn rates are, sub 1%, 0.5% in some cases, or even lower, right? And so that's attractive to us. What's important is that as we make these acquisitions, that we keep that culture, right, that local touch within that business and throughout our organization as we grow. So that's a key part of what we do. Our channel program is also a way of extending our local touch, right? So we partner with MSPs, managed service providers. We partner with legacy PBX vendors, the guys that were selling, traditional PBX systems, years ago. And a lot of these are family-owned businesses that have been doing it for 30 years, right? And they just have great relationships in their local market. So we actually have a very unique channel program whereby that partner continues to provide that local touch and support, right? We still take care of everything else, obviously the network, the platform, the services, the solutions. We bill the customer, they don't have to worry about all that taxation and regulatory fees. If you've ever looked at your AT&T bill or Verizon bill or whatever you're using, you know that there's like all these charges, right, on your bill, and it's so complex. And so we take care of all that for our partners, right? And in return, they take care of that local touch, right? Which is it's turned out to be a very good combination, right? And so again, those are two ways that we really extend our local touch to that end user and provide the support or the kind of support that they need. What I didn't mention before about our target market, these are small to medium-sized businesses. They don't have an army of IT people, right? They don't have, in a lot of cases, the budget to go out and apply, a bunch of dollars and assign a bunch of people to a project to move them to the cloud, whether it's for our application or others. They look to service providers like us or the companies, service providers we're acquiring to implement those solutions for them, right? And so again, that's where we can make a difference. And then when you get back, I keep touting the integration, right? There's usually some kind of integration with some kind of CRM, some kind of accounting, some kind of system that will really set us apart, and that's value to the end user.
And the company is based in Texas and Florida, two high growth markets. Can you talk a little bit about how you might track acquisition prospects in those markets and describe the market opportunity? Do you see the company migrating into other markets? And if so, what other markets might have a similar profile that you would be interested in?
Right. So we are focused right now in Texas and Florida for obvious reasons, right? It's the second and fourth largest states in terms of GDP, right? State growth and state economies, and so it's there. And as you know, a lot of businesses are moving. A lot of people are moving to Texas and Florida, and so they're both high growth markets that we think is good for us to continue to focus on, right? But we do have opportunities outside of those two states, right? And you will see us likely, acquire service providers outside of Texas and Florida, right? At the end of the day, if they meet the criteria, right, in terms of the size, low churn, similar or identical technology stack, right, whether they're in Texas, Florida, or California, we're going to take a look at it.
And there seems to be a unique roll-up strategy here you just talked about. Of course, I've been familiar with a roll-up strategy with a company that I first followed back in the mid-'80s, Clear Channel Communications, which was in your back door in San Antonio. So certainly there's a highly fragmented market, very similar to the Clear Channel story. In your case, you have nearly 50% of the telecommunications service market is provided by local and regional players. The question is, why do you think now is the right time for a roll-up opportunity?
Well, I think for several reasons. One is, a lot of these service providers have been doing this for 5, 6, 7 years, right? And they reach a point, again, it's usually it's a closely held company, husband and wife team, father and son team. We see a lot of that. And so they've done a good job of building their business up to 2, 3, 4 million in annual revenue. Again, and I don't think I mentioned this, it's all recurring revenue under contract with business customers, right? That's the type of service we provide, and that's what these service providers do, right? So they built a nice recurring revenue stream, They've made it into a lifestyle business, right? But they kind of reach a point where they can't grow much more in that particular market for a lot of different reasons. Maybe it's just, again, resources. Maybe it's other products and services they want to deliver alongside that cloud-based communication solution. So they're kind of faced with a dilemma if they want to keep growing, right? And for a lot of them, it makes a lot of sense, to look at an opportunity with us. Again, they become part of our family. We typically keep local sales team, a local support team. We integrate the back office. We integrate the core network and platform to get some cost savings, obviously. But it just becomes a good time for them to look at an opportunity with us based on where they are in their business life cycle, right? And they've been at it a long time. I don't want you to think that some of these companies just sprouted up a few years ago. Most of these companies that we look at have been doing this for a good, I'd say between 5 and 7 years, right?
And Art, you mentioned about the metrics of acquisitions. You like companies that are 2 to 10 million in revenue. But what about the technology? What about the purchase price? What about whether or not these companies cash flow? Can you talk a little bit about the other parameters that you seek in looking at acquisitions?
Yeah, typically when we look at an acquisition, if they're running their business right, they're generating somewhere between 15 and 20% EBITDA or cash flow, right? As you know, what we do today in our business in cloud telephony, it's a low capex business, right? Not unlike telecom of the past, where it was a high capex business, right? It's very different now. So typically EBITDA is directly tied to the cash flow of the business, right? So you're going to see some healthy cash flows. Again, you're going to see low churn, right? Because they've done a good job of keeping their customers. You're typically going to see, contracts with customers that are 1 to 3 years, right? And typically they've got not only business customers, they've got municipalities in their local market. We always seem to tuck in a municipality deal in every acquisition we make, in their region or local area. So those are the characteristics we like to see. On the technology stack, this is important to us right now. And we've got a pretty good, we got visibility into about 50 providers, just kind of as I call it, low-hanging fruit for us that is over 100 million in annual revenue. I'll call that our near-term pipeline. It's a lot bigger than that, but again, that's the low-hanging fruit for us right now. So a lot of these companies are at that stage where they're ready to enter into some kind of transaction, and we can usually buy right, okay? We don't get into a situation where we're bidding, right? There's not a banker involved, Michael, in most cases, right? It's and as you know, when a banker I don't have anything against investment bankers, but if somebody sponsors a deal, as you know, they're going to market it, and it's going to run the price up a little bit, right? Usually that doesn't happen in our case, right? Because again, the companies are too small for that. So it's not a competitive bid situation, right? So we're able to buy right, and that's important to us, right? We're looking to buy between on a multiple basis, you're looking at 0.8 to 1.5 times trailing 12 months revenue, right? That's kind of the range we look at, which ends up, usually it's about 4 to 5 times EBITDA. But the nice thing about it, if we buy right and then it fits the criteria, it checks off all the boxes, right? We're going to generate even more cash flow from that business once we integrate it, right? And once we bring it into the family, right? So that improves the ROI, and it just makes sense when you model those out.
I'm curious, Art, is there a long tail in terms of negotiating with many of these so-called mom and pops to sell their business, and what is the motivation for them to sell?
Yeah, so I think the motivation for them to sell is what I mentioned earlier. They might be a little fatigued, right? They've been running the business and they've, again, maybe what we do see a lot is that these businesses have grown at a good pace, and then they've kind of flattened out, right? And again, it's become that lifestyle business, and then they got to make some decisions, right? Do they dip into their lifestyle to grow, or what do they do? Or do they sell the company? Again, most of these companies have been at it for 5 to 7 years, and it's kind of the right time for them to take a look at this and consider it. The cycle on negotiating or working through a deal, quite frankly, has been I think on the long side in terms of months, probably 6 months, 7 months. To as little as 30 days. So, we've done enough of these where we know what a fair value is for that business, right? And we can just do some preliminary due diligence to really determine what that is early on. Again, because we're following criteria that, again, checks off the boxes, and it's what we know, right? It's a technology stack we know, it's a business we know the type of customers they're going after. And, what I think a lot of businesses or telecom operators, like us, where they make a mistake is they just go out and buy revenue, right? And obviously you do want to buy revenue, profitable revenue, but it's not just about buying revenue. If you can stay disciplined to buying revenue that's synergistic, that's got, again, that fits a model that you can build on, especially when it's recurring revenue like this with good cash flows. We feel we got to stick to that, right? We got to be disciplined about this. We don't want to, move away from that. I mentioned technology stack earlier. That's really important because, we don't want to have to retrain our support team, right, on a new technology stack. That would cost money, right? That would take time, and that eats into the integration. You can't integrate if you've got to do that. Then the other is, the customers don't miss a beat. If you're acquiring the same technology stack, the customer is going to be on the same platform and portal environment that they had, before. And that's an easy transition for the customer, which is, at the end of the day, really important to us.
And currently, you're kind of using your capital and allocating it towards concentrating on building scale and looking for acquisitions. And at some point, I would assume you would start to allocate more capital to enhance revenue growth. So I was wondering if you could just talk a little bit about what you think, and when do you get to that scale point where you start kind of shifting your attention to maybe accelerating revenue growth on an organic basis?
Yes. So yeah, it's a good point. We're still relatively small, Michael, and so we got to be careful how we apply our resources, right? So when we have our planning sessions, we talk about, okay, we can go down this path and invest into dollars into the organic plan, which is sales, marketing, operations to support that. Maybe some capex, right? Or we focus our resources and our team. Again, we're a small team, right? We focus our team and efforts and resources on the integration of an acquisition, right? Well, when we've modeled this out and looked at it, it just makes more sense, at least at this stage, to really, shift those resources more towards that M&A, right, and integrating those acquisitions, right? Now, as we scale and we've got more resources, we keep stacking that EBITDA, keep stacking that revenue. Obviously, we're going to be in a position to maybe divert more resources toward that organic growth. We have publicly stated, we're targeting between 5 and 10% organic growth. Which again, considering that we have this M&A strategy and again, a small team, right? There's only, one of me and one of Antonio, my CFO, and, we got one CTO and, we don't want to stretch everybody pretty thin, right? So, and then of course, there's an underlying team under that does due diligence, that comes in on the integration, right? And so there's a lot of work to be done there. So we want to make sure that we, and by the way, we also apply, every time we come into an acquisition, we re-energize sales through our sales and marketing plans, right? And so there is a sales component to getting that acquisition to start growing again. Again, if they've kind of been flat for the last year or so because they've topped out. So it's not just the the financial aspect of it, the technical side of it that we do inject again sales effort into that to re-energize sales in that particular market. But at the end of the day, for us, diverting those resources, or not diverting, but investing those resources in that acquisition and integrating that right now makes more sense to us at this stage, or for us at this stage, than investing in the organic side. So we're trying to balance that out, Michael. That's really at the end of the day what we're trying to do. And for a company our size, we got to be careful how we balance that out.
And also, you indicated that you've learned best practices from your recent acquisitions, and most recently, I think you just mentioned about your partner program. Can you, first of all, give us an update on how the partner program is going? And then secondly, are there other aspects of best practices you've learned from some of your more recent acquisitions?
There is, and I can give a few examples. Our most recent acquisition of Nexogy, Nexogy had a very mature channel program, and they had a whole back office or operational system to support that, right? And they'd been able to scale and grow with that channel program. So that was one of the things that attracted us to Nexogy, right? Is that they had this great channel program that we were able to actually combine with our channel program. As I mentioned earlier, we started down a path early on where we would work with traditional PBX vendors, MSPs, right, to introduce our solution into their local or regional market. And we did it in a way that was rather unique in that, again, as I described, we required that partner to provide that first tier support, right? And they were able to name their own price, right, on the solutions that they introduced of ours into their market. And we built the whole back office and billing system around that. Again, we handle all the billing. We handle all the telecom fees, all the regulatory stuff, all the stuff that people, service providers don't want to deal with. We take care of. So, but again, it was a great give and take because we provided everything that was needed, and then again, that partner would provide that first tier support. That program, it's not called our Blue Label program, right? It's not white label. So we came up with Blue Label, and so that program is doing really well. So we took that program that we built right from day one and combined it with the Nexogy channel partner program. And at the end of the day, we ended up with we have about 340, 350 channel partners, right? And that army's growing, right? Every day we're adding more and more channel partners, and we're just seeing more demand, especially for our Blue Label. We really like that because our Blue Label partners want to keep building their brand equity in their market, right? So it is a co-branded solution. So they're able to do that through our Blue Label program. And they want to maintain that relationship with the customer, right? And provide that local support, but they don't want to deal with everything else, right? And that's where we come in. So we think that program is going to have tremendous success, right? And Nexogy had just built and scaled a kind of a traditional channel program that continues to grow. That's still growing at a faster pace than our Blue Label program, but we see those programs together really achieving some, again, back to your organic growth. In the future, I think we're going to be able to do more with that, with those plans to grow at a more aggressive pace, organically.
And the company has a couple million in cash and some access to a credit facility to make acquisitions. I was just wondering if you can kind of talk a little bit about your prospect for acquisitions. I would assume that you're always looking, but if you can kind of give us an update on whether or not there are acquisitions that appear to be more imminent, and what are your thoughts on acquisition, the environment right now?
Yeah, so the environment is healthy, Michael, and we completed two at the same time. We closed two transactions at the same time in our last set of acquisitions, and as you know, we were financed by Post Road Group. We now have a financial partner in Post Road Group that initially right now we have a $20 million facility. We still have availability under that facility, but Post Road is doing really well, and they want us to grow, and I think they'll be able to take that facility even higher as we achieve some of our milestones, right? So we have a very healthy pipeline. I can't talk about what we're working on. But I can tell you that, and we have, I think it's not public information, we're looking to uplist to a primary exchange. And you mentioned Clear Channel and how they went about their acquisition strategy. I think if I'm not mistaken, they went from 100 radio stations to 1,200 radio stations, all local radio stations, right? Very similar to what we're doing here, our local approach, local market approach. I think it was over 11 years that they grew like that. And so they were able to leverage their currency on a public market, right, on the public exchange. And we want to do the same, Michael, but we can't do that on the current exchange we're on. We believe that getting on a primary exchange will allow us to now tap into those equity markets in the right way, right, in a cost-effective way. And that combined with debt and financing partners like Post Road Group will help us really accelerate what we want to do. And again, I just referenced Clear Channel because they were able to do that and go from, I think you probably know better than me, but they had a small number of radio stations for a long time, and then all of a sudden, when some ththings opened up for them, they were able to leverage the equity markets, the capital markets as a public company, leverage debt. And ultimately, they got from 100 to 1,200 radio stations, and they became a behemoth of a company. Right? I don't remember their revenues there towards the end, but they were pretty big. You probably know better than me.
Yeah, part of that growth was the fact that they were limited by the number of stations they could own, at least when I followed them, and the FCC kept lifting the limits. And so part of that roll-up strategy was, they were limited by regulation.
Right.
And I'm surprised to see that, the stock has kind of drifted over the course of the last couple of months here. And, it's now trading around 2 times revenues, whereas the industry is still trading well above 3. Do you think that this is over concern of COVID, just the general lack of interest in the marketplace during the dark days of summer, the health of the general economy? It seems like there is a disconnect here, given that businesses appear to be rebounding. What are your thoughts about just the current fundamental environment, and then your thoughts about the stock?
Yeah, so I think we are dealing with the summer doldrums, right? It started back in May, and I'm hoping that after Labor Day and some other activity we have going on, news, et cetera, that we'll get some momentum again. You pointed out we're undervalued. I believe we are, and so I'm not shy about saying we believe this is a great investment opportunity in our company. We've got a solid management team that's done this before. We've got I believe a solid business model with a lot of opportunity in front of us, right? There's plenty of pipeline there in a fragmented market. And then in general, just the market itself. I mean, it's on a global basis, it's expected to grow from what a current value of about 37 billion. This is just our sector, right? UCaaS, 37 billion to 167 billion in the next 7 years, and that doesn't even consider the CCaaS side of things, the call center applications, and some of the other stuff we do in the background for our customers. That's expected to grow to like 72 billion, right? So just, again, I say the stars have aligned for us, and I stand behind that. I think it's a great opportunity to build a company like this and create significant value. I do understand, again, we're on the OTC, and we face some challenges there. It's a little more challenging and harder for investors to go in and buy our stock as an OTC company than it will be in the future when we're on NASDAQ or NYSE, right? It's just a fact, right? So unfortunately, that's a little bit of a barrier for investors. But again, that doesn't change the fact that we think this is a great buying opportunity, right, for investors, and especially when we're, as you say, we're undervalued, compared to our peers.
And Art, do you think that uplisting would also make the currency more attractive for you to make acquisitions using your currency?
Absolutely. And so again, getting uplisted is not all of a sudden, that's not the magic bullet that's just going to create all this, value for us. That's not the case. We got to keep executing. We got to keep building, and we will keep doing that. But you're absolutely right. It's going to be an opportunity for us to now have a currency that we can use in these transactions, right? We always structure, and this is all public info because every transaction that we do, it's filed, in our 10Ks and Qs. And so, we have typically a component that is a seller finance component, right? That's directly tied to the customer base. It's more of revenue assurance for us, right? And there's a percentage there that we manage to, depending on the type of contracts they have with their customers, right? And the length of life with their customers. So that, and then we have some equity component. It's been a smaller piece when you're on the OTC. It's hard, to do that equity piece. But then you've got, again, the debt component, which will always be a part of it. But we want we want to make sure, we manage that properly. We don't want to get overextended, right, on the debt side. So the equity piece, having a public currency or a stock on NASDAQ or NYSE, it's a great currency for us to use under what I just described, right, in terms of our acquisition plan.
Well, Art, there's tons of things that we could talk about. Obviously, it's a dynamic industry. I want to thank you for your time today, and hopefully you will join us again and do another one of these interviews, and we'll go into some other detail about the company. But it's a very exciting time for your company. I look forward to following it. For the viewers that have watched this program, for more information on Digerati Technologies and stock symbols DTGI, I encourage you to check out my report on the company on channelchek.com. Thank you, Art. Thank you for watching today. Thank you.
Thank you, Michael.
Thank you for joining us for this C-Suite interview presentation brought to you by ChannelChek. Visit our YouTube channel for more interview content, as well as virtual roadshows and conference presentation replays. New content is added regularly, so subscribe below to stay up to date. Visit channelchek.com or click the link in the description to access equity research, news, and advanced market data on this and the 6,000 other small and micro-cap companies listed.